Hello traders, and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 8th, 2025, and we're breaking down the USDCHF pair, which is currently at a very interesting inflection point. We'll start with the crucial news and fundamental drivers impacting the market before diving deep into a multi-timeframe technical analysis. So, let's get right into it. First, let's talk about the fundamental landscape, which has been dominated by central bank actions. The biggest story recently was the Swiss National Bank's surprise interest rate cut in late September. This was a significant dovish move, intended to stimulate the Swiss economy, and it immediately weakened the franc. Conversely, we have the U.S. Federal Reserve, which is perceived to be on a much tighter monetary path, creating a fundamental divergence that is typically bullish for USDCHF. However, this bullish sentiment was recently challenged by political issues in the United States. News from early October highlighted concerns over a potential U.S. government shutdown, which weighed heavily on the dollar and caused a sharp dip in this pair. Investors are now cautiously awaiting the upcoming FOMC minutes for further clues on the Fed's direction. This clash between a dovish SNB and a potentially hampered US dollar is creating the choppy price action we're currently seeing. Now, let's see how these events have played out on the daily chart. Looking at the bigger picture, USDCHF was in a powerful downtrend for much of the year, falling from highs above 0.91 back in May. The pair bottomed out around the 0.7858 level in mid-September, establishing a significant level of support. The trend saw a dramatic reversal on September 25th, which we can see with this massive bullish candle right here. This surge lines up perfectly with the SNB's surprise rate cut, which sent the pair soaring from below 0.80. Following that spike, the pair ran into resistance and was then knocked back down by those U.S. shutdown fears at the start of October, where it established a new short-term support level around 0.7925. Since that low, the price has been grinding its way back up, currently trading in a tight consolidation range. Let's zoom in on the price action since the beginning of September to get a clearer view of these key events. Here you can see the final leg down to the September low at 0.7858. Then, this is the explosive move on September 25th, where the price shot up to a high of 0.80138 on the back of that SNB news. This level at 0.8014 is now our most critical overhead resistance. Notice how after failing to break higher, the dollar weakness pushed the pair all the way back down to this 0.7925 low on October 1st. For over a week now, the price has been caught between this 0.7925 support and the psychological resistance at 0.8000. This coiling price action suggests that a significant breakout could be on the horizon. Now, switching to the hourly chart, we can look at the price structure from mid-September that led up to this volatility. This data covers the period from September 17th to the 22nd. What's notable here is the relatively low volatility and choppy, sideways action as the pair consolidated near its lows. We can see multiple tests of both intraday support and resistance, with price action being tightly coiled. This kind of price compression is often what happens right before a major news catalyst triggers a massive breakout, which is exactly what we saw a few days later with the SNB announcement. To get the most up-to-date, granular view, let's move to the 15-minute chart and look at the last few trading days. Here we can see the price action since October 5th. After a dip on October 6th, the pair has been in a slow and steady uptrend throughout the October 7th session. We can identify a clear short-term support level around 0.7947. The price is methodically pushing up against intraday resistance near the 0.7985 level. The momentum here is constructive, but it's not explosive, suggesting that bulls are cautiously testing the seller's resolve as we approach that major 0.8000 psychological barrier. A decisive break above these recent highs would be a strong short-term bullish signal. Alright, let's bring it all together and recap the key levels and potential scenarios. The entire market is watching the range between critical support at 0.7925 and the major resistance zone of 0.8000 to 0.8014. Our primary scenario, which I'd place at a 60% likelihood, is bullish. This is based on the powerful fundamental driver of diverging monetary policies between the SNB and the Fed. For this to play out, we need to see a confirmed break and hold above that 0.8014 resistance level. If that happens, the next logical target for buyers would be the 0.8100 area. This scenario would be strengthened if U.S. shutdown fears continue to fade and upcoming economic data from the U.S. is strong. On the other hand, our bearish scenario has about a 40% probability. This would be triggered by a strong rejection from the 0.8000 resistance zone. A failure to break higher could empower sellers to push the price back down to test the 0.7925 support. If that support level breaks, the door opens for a move down to the September lows around 0.7858. This outcome would become more likely if the FOMC minutes are unexpectedly dovish or if U.S. political turmoil intensifies, weakening the dollar. What to watch for in the immediate future is how the price reacts at this 0.8000 level. So, in summary, we have a classic battle between conflicting fundamental drivers, creating a clear technical range. Keep your eyes on support at 0.7925 and resistance at 0.8014. A break of this range will likely dictate the next major move for USDCHF. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and ring the bell so you don't miss our future updates. Finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Trading involves risk, and you should always conduct your own research and due diligence before making any investment decisions. Trade safe, and we'll see you in the next video.